All right, let's talk about one of the wildest stories on the market right now. It's about a company called Oklo, and it's making an absolutely massive bet that it can solve one of the biggest problems tech is about to face.
And this really gets right to the heart of it, doesn't it? It's the ultimate high-risk, high-reward question. Can a company that has literally never made a single dollar in revenue, can it really be the answer to fueling the future of AI?
So that's what we're going to dig into today. We're going to break down Oklo's whole deal. We're talking its wild tech, its management, its financials, and of course, that sky-high valuation. We'll even look at what the stock chart is telling us. By the end, you'll see the full picture, the good, the bad, and the risky.
Okay, first things first. To really get Oklo, you have to understand the insane scale of the problem they're trying to solve. You see, the amount of power that big AI data centers need is just exploding. We're not talking megawatts anymore, they're talking gigawatt-level demand. That's basically needing an entire traditional power plant for just one single customer. It's nuts. So you might be thinking, why not just build more solar panels and wind turbines? Well, here's the problem. They're intermittent. The sun doesn't always shine, the wind doesn't always blow. But AI? AI never sleeps. It needs a constant 24/7 fire hose of power. And that's where nuclear energy comes in. It provides that super dense, carbon-free power around the clock. It's exactly the kind of steady, baseload power that AI desperately needs.
And that's where Oklo steps onto the stage saying, hey, we've got the answer. But let's just say their solution is anything but simple.
Oklo's whole business is built on this really advanced tech called fast neutron fission. It lets them do a few pretty unique things. So it breaks down into three parts. First, the main event. There's small Aurora power plants that are designed to be built right next to data centers. Second, and this is a huge deal, they have a closed-loop fuel recycling system. Get this, it can take nuclear waste and turn it back into fuel. And third, they also have a side business producing special isotopes for things like medicine.
This right here, this slide, is the whole story in a nutshell. It's the promise versus the peril. On one hand, the promise is incredible, right? Clean, reliable power, a way to get rid of nuclear waste, and they've got a head start on getting the permits. But on the other hand, the peril is just as big. The tech is incredibly complicated, the government regulations are a total minefield, and being the first to do anything means you're going to face all sorts of unexpected costs and problems.
So, with that huge risk and reward in mind, let's take a look at the company itself. Do they have the right people? And more importantly, do they have the money to pull this off?
A company in this industry can have the best tech in the world, but if they can't handle the bureaucracy, they're toast. And this is where Oklo's management team has really proven themselves. For over a decade, they've been hitting these major regulatory milestones, stuff that is super hard to do in the nuclear world. This team knows how to play the game and get things done.
Okay, now this slide tells a really fascinating story. Just look at the top part. They have about $1.4 billion in cash and almost zero debt. That's a fortress of a balance sheet. But then you look at the bottom half, zero revenue. And they lost over $100 million last year. It's a total financial paradox.
So what does that mean for their survival? Well, that huge pile of cash gives them a runway of over 2 years at their current burn rate. That is a crucial cushion. It gives them time to keep working on their tech and fighting through the regulatory maze without worrying about the lights going out tomorrow.
And that brings us to the big one. Probably the most important question for any potential investor. After everything we've seen, what is this company actually worth? And is the market paying a fair price?
Right now, the market is valuing Oklo at roughly $8 billion. Just let that sink in for a second. An $8 billion price tag for a company that we just confirmed has zero revenue. That tells you the market is expecting some incredibly good things to happen in the future.
So how on earth do you value a company like this? Analysts use a method called discounted cash flow, or DCF. Basically, since you can't look at what it's earning today, which is nothing, you have to guess all the money it's going to make in the future and then work backwards to see what that's worth today. In other words, the market is pricing Oklo entirely on its potential, not its reality.
But here's the catch. The analysis suggests that the current stock price already bakes in a successful outcome. And that leads to this critical quote here. The price doesn't provide a margin of safety. That's basically Wall Street talk for there's no room for error. If anything goes wrong, delays, cost overruns, anything, this valuation could be in real trouble.
Okay, so that's the fundamental picture. But let's switch gears and take a look at what the market itself is thinking. A stock chart can tell you a lot about investor psychology.
And when you look at Oklo's chart, whoa, it tells a pretty dramatic story. You see this massive 5-wave surge heading straight up? That was a period of intense hype and excitement. And then, well, what goes up? You see this huge corrective wave down.
You can really break this story into 2 simple acts. Act 1 was the hype cycle. From April to October, the stock went on this unbelievable run, peaking way up there. And then came Act 2, the correction. A lot of that hype vanished, and the stock gave back a huge chunk of those gains, falling all the way down to where it is now.
Now, for those of you who are into the technical details, the analysis points out that this key indicator, the RSI, is in oversold territory. Now, sometimes that can signal that the selling is overdone and a stock might be ready to bounce back. But, and this is a big but, the analysis also warns that other technical signals aren't confirming that just yet. Plus, with the whole market looking a bit weak lately, this downward trend could easily continue. So the correction might not be over.
So after looking at the business, the finances, the valuation, and the chart, you're left with this classic investor's dilemma. It is a straight-up battle between 2 completely opposite ways of looking at this company.
So let's boil it all down. Here are the 2 sides of the coin. The bull case is really compelling. This is a pure bet on the AI energy boom. They've got a ton of cash, a management team that knows what it's doing, and some really different tech. But the bear case is just as powerful. They're not making any money, and they're burning through cash. The valuation leaves 0 room for error. There's a huge risk of delays. And at the end of the day, their tech is still completely unproven in the real world.
And that leaves us with the final multi-billion-dollar question. Is buying into Oklo today getting you a front-row seat to the future of energy? Or are you just buying a ticket for a hype train that's already left the station? That, my friends, is the question you have to answer for yourself.